Good morning all. I thought I would make a video on trade management, I guess some trade psychology during I guess a risk off environment. And we are in a risk off environment at the moment, today being the 24th of February 2022. Putin orders Russia attacks across Ukraine, dark days. So Russian leader says US crossed the line with NATO expansion. Biden says Western allies will impose severe sanctions. So what does that mean in currency land, right? And one of the things, I guess, if you haven't heard me say this before because you're new to the to the Discord mentoring group, or even if you have been here for a while and maybe forgotten certain things, it's always best to have, I guess, a refresher as well. So for those of you who haven't been in the group that long, that have joined recently, this is going to be obviously your first time when it comes to really kind of trading and understanding, maybe risk on, risk off concepts and how to really kind of I guess trade and manage your trading during an environment like this. Now, the first thing to really understand and accept is that nobody knows what is going to happen, right? No one knows what is going to happen, minute to minute, hour to hour. So just understand that you have to understand and embrace almost the uncertainty of it, right? Uncertainty. And when I say embrace uncertainty, I mean just understand that. Don't try to know or try to figure out what is going to happen. We deal with probabilities and possibilities in trading, and so we have to just understand that there's a possibility and a likelihood of something happening over another, and whether we want to trade in that environment, because not trading is a choice as well. Yeah, doesn't mean that we must trade in every single environment. There is a time where we can sit on our hands, and we should sit on our hands if things are very uncertain. But when it comes to trade management, and really our trading psychology, one of the things that we should really be aware of is understanding that our position size management in maybe an uncertain environment such as what we're dealing with right now. Yeah, and as a rule of thumb, I guess our risk positions, or my risk position, is based on basically a 10 trade losing streak. If I was to have a 10 trade losing streak, and I have, right, for what it's worth, I think the longest losing streak I had was 15. Many of you know it wasn't necessarily on 15 different currency pairs. It was when I was being many years ago, when I was being silly, placing pending orders on 8, 9, 10 different pairs and doing silly things that I shouldn't have been doing back in when I was first started trading, right? And I lost 15 trades in a row. But anyways, the point is that a 10 trade losing streak can happen. Now, if you do have a 10 trade losing streak, if you did have a 10 trade losing streak, right, what would be the maximum risk on your account that you would be willing to accept? Meaning that if you had a 10 trade losing streak and you risk 1% on a trade, are you willing, to accept a 10% drawdown on your account? 10% drawdown on your account. If yes, then that's fine, right? Then you risk 1% on a trade. Some people are not. Me, I'm more risk averse. So personally, if I have a 10 trade losing streak, I generally will risk somewhere between 0.5 to 0.3%, 3% on trades depending on the environment. So the most I will lose on a 10 trade losing streak, it doesn't happen very often, quite rare, but if it does happen, and when it does happen, the most I will lose on a drawdown, if things always keep going against me, is 5%, is the maximum, right? Is what I'm prepared to lose on a 10 trade losing streak. Can I use 11, 12, 13, 15, etc.? Yes, of course we can. It's highly unlikely, although it is possible. But that is really the mindset that you have to have, because this is possible. A 15 trade losing streak is possible. A 20 trade losing streak is possible. Nothing is impossible in this world, right? So base your position size on an extreme, yeah, and then whatever that extreme is, whether it's 10, whether it's 20, whatever it is you think is the extreme, use maybe 10 as a baseline. Then divide that up into per trade, and if you're comfortable with that, that should be your trade. As a caveat to that, though, while you're learning to trade, while you're learning a technical strategy, a fundamental strategy, a methodology, I really advise the lowest amount of risk that you should take. You know, if you can take 0.1% on a trade per trade, then that should be it. That should be it. Right, I guess, and I understand that not everyone can risk 0.1% on a trade because they have smaller accounts. I definitely understand that, but it should be the smallest risk percentage that you can possibly risk per position size. So that should be really where your mindset is, and once you figured that out, the next really step, not necessarily in order, but one of the things you should think about is knowing when to risk less than normal per trade. And again, I say again, but those of you who know me and the way that I trade, and I've made videos on this, is that I have more of a risk on bias, right? A risk on bias, meaning I believe that that human beings have problem solvers, right? And eventually we solve problems. The Russia-Ukraine war, escalations, tensions will be resolved, right? Nobody wants to live in perpetual war. We generally want peace. War is not good for the economy, and it's just not good for lives, etc. So from that perspective, there's always a need and a want for a resolution, right? So from that perspective, in a risk on in a risk off environment, yes, you know, money will tend to flow into safe haven assets, for example, or safe haven currencies, I should say, like, for example, the Swiss franc and the Japanese yen. Now, you know, you guys know that I'm, you know, a buyer of, for example, the commodity currencies, you know, the Canadian dollar, the Australian dollar, and the New Zealand dollar. More recently, the Australian dollar, I think, should want to is a bit undervalued. Again, we have to kind of wait for the data to support that narrative, right? And against for example, the yen and the Swiss franc. Now, in a risk-off environment, you should have price. I mean, the yen and the Swiss franc are the safe haven currencies that will generally tend to strengthen. But if you understand, you know, fundamentals, I guess more risk on sentiment and, you know, fundamental analysis when it comes to monetary policy, inflation, interest rates, etc., generally should prevail in the long term. Risk off sentiment can last for a while. It can last for a short time, again, because of the need for humans to want to come to a resolution and just generally have, you know, peace. So from that perspective, risk, if you're trading, for example, you know, the CAD yen, yeah, trading the CAD yen, and my bias would be to the long side, right? Now, in a risk off environment, you would probably see prices do something like this. Yeah, in a risk-off environment where the yen is getting stronger than the CAD because money is flowing into the Japanese yen. In an environment like that, I will still be long because I'm not looking at the taking advantage of the risk-off sentiment. I'm understanding that risk sentiment, yeah, can push prices to where to bargain prices that when risk-on comes back, I have a lot more upside and a lot more risk-reward. Yeah, but getting back to, I guess, knowing when to risk less than normal, this is an environment where I will risk less than normal. If I understand that there's a possibility of risk, risk off sentiment coming into the market, or we are in a risk off environment, then why would I, risk 0.5% on trades, right? It doesn't make any sense. Lower the risk sentiment, 0.3, even 0.2. Right, percent in an environment, and when things start to come back to more risk on, and there is more of a resolution, yeah, then I can increase my position size and go back to normal. So that's all part of risk management. So again, reducing position size, yeah, and the number of positions. So as you guys should know, is that I generally will risk at least 3 positions on each trade, 1 market order and 2 pending orders, sometimes 3 pending orders if I'm very, very bullish on a currency pair. But generally, I will risk 3 positions. Now, what you can do if you risk 3 positions as well, what you can do is actually just risk 2 positions, right? So not only reduce your position size, but have maybe 1 market order and 1 pending order rather than 2 pending orders, or just risk 1 position, and that could be either a market order or a pullback pending order, right? But these are the things that you need to consider in an environment where the market is uncertain, and of course you can just sit out until things do get back to normal. And another thing as well is looking is to shift your focus to maybe higher time frame setups. And the reason why this is because on a lower time frame it's very hard to to understand which level. I mean, with us, we're looking at obviously daily supply and demand zones, right? We should be, but when it comes to the amount of supply you want to see, or the amount of demand you want to see in a candlestick, yeah. So, for example, let me just bring this out, right? So let's say, for example, that's your candlestick right there, yeah. And let's say, for example, this is a candlestick you want to get involved in. Now, if this is a 1 hour time frame, yeah, it's very difficult to understand that prices, coming down to a level, whether that 1 hour, pin bar or whatever the candlestick is, doji, that you want to, look to trade, is enough of a signal in an environment like this that is going to signal really a reversal, because this could just be profit taking. Right, this could just be profit taking as prices continue to go down, yeah. But if you're looking at that as maybe a daily time frame chart, or a 12-hour or an 8-hour, for example, you have actually 8 hours worth of demand, yeah, rather than 1 hour or 15 minutes, yeah, in that candlestick formation, to then assess what has happened over that 8 hours. Then you can say, all right, then, well, within that 8 hours, we did get some positive news. Within that day, we did get some positive news. Yeah, within 24 hours, we did get positive news on, the Russia-Ukraine tensions, and then that will be enough confluence to and enough demand potentially to want to enter into a trade. And again, I know traders are going to say, well, the risk reward is skewed. I have to have, more risk, more reward, because that might represent, 100 pips, for example, rather than maybe 20 pips, for example, on an hourly time frame chart when it comes to, your entry and your stop loss. But that's not really, the point. You shouldn't really be thinking like that, because if prices come down to a level where risk is, and as I said before, risk off sentiment pushes prices to bargain areas where we want to be buyers. If it's pushed price down enough, you should have enough upside potential, to risk maybe, 100 if you have an upside potential of maybe 300 pips, 400 pips, right, to the upside. So it's, more about perspective. Plus as well, this should really represent still, your 0.3%, 0.2% if your account is big enough. Maybe if you can't risk that amount, maybe it has to be risk, you have to risk 0.5% on that trade, or 0.8%. But whatever the risk is, yeah, wherever the position is or the size of the trade, it should still be the same amount of risk percentage. Plus as well, you've got the added bonus of time, yeah, time to understand why this is maybe not just a profit taking candle, yeah, on the way, down, or why actually within that time period we can see that, and reading, new sentiment, that things have actually got a bit better, yeah, within the past maybe day or so. Yep, Putin's announced that he's pulling troops back, and rather than trying to jump in on an hourly time frame, which is very it doesn't carry the same weight. That amount of demand in an hour does not carry the same weight as the amount of demand that would take place over a day. Plus, you've got the confluence of understanding the news flows, right, and what is actually happening, and the resolution. So from that perspective, shift your focus to higher time frame setups. They're safer. Yes, you get less risk reward, but at the end of the day, it's not really about that. It's about the protection of your capital and not basically death by 1,000 cuts. So again, should you trade in a risk off sentiment, is the question. And again, I've mentioned this before, risk off sentiment can end at any time, at any moment. Even by the time you watch this video, there could be headlines where, Russia have backed down and there is a resolution, right? Nobody knows, nobody can predict it. Yes, there is a likelihood of it probably continuing, but there is obviously the possibility that it could end. And just for, just this screenshot, just to explain, is I took a screenshot of it today. F Green says that what happens next in Russia has finally, what happens next as Russia has finally invaded Ukraine? What is going to be the long-term effect on the markets? Will the risk of sentiments perpetually prevail? And he says he doesn't think so. And I have to, agree, with this statement. And I expect the market to eventually price in the war. It always does, right? It prices in everything. And gradually bounce back, as I was saying before, with humans and our need for peace and not perpetual war. And I know there's the military-industrial complex, etc., and whatnot. But at the end of the day, I do believe that peace is the way forward. And so the war, and gradually bounce back sometime soon, even if war rages on. And he would be looking to buy the dips on the dollar, the CAD, the Australian dollar, the New Zealand dollar versus the Swiss, the yen and the Swiss franc cross pairs. Absolutely, in my opinion, and I totally agree. F Green, and that's my position as well. And again, we understand that nobody knows. I'm not trying to time. We're not trying to tell everyone when the bottom is going to be in and when when the war is going to be over. That's silly. But at the end of the day, risk off sentiment can end at any time. Remember that the market is an auction at all times. There are buyers and sellers. There are buyers and sellers. And if you don't recognize that the market is always an auction, meaning that the market is never always going to go down in a straight line. The market cannot go down in a straight line. Even if the path of least resistance is to the downside, you will have moments where you have fair value auctions, for example, and there is an opportunity to potentially, buy at certain levels. And then if for example, this is obviously, price and this is time. If, for example, during this time where we have, a fair value auction, there is a resolution in with the Russia-Ukraine war, then the buyers in this auction, price auction, many of you may recognize it as a sideways moving market, a range, consolidation, etc. If during that time, let's say for example that's today, and then this might be for example next week or next month, if during that time the war gets resolved, then this is going to look like an absolute bargain if we're trading these currency pairs like the dollar, the CAD, the Aussie dollar and the New Zealand dollar against the yen and the Swiss franc, right? Because those are currencies that you really want to sell in a risk on environment or less risk off. So from that perspective, there's always going to be auctions. The market is not for speculation, right? Even though we speculate on the market is an auction between the market makers providing liquidity and I guess the financial institutions who want to buy and sell at prices. And if you don't understand that, then unfortunately you really are at disadvantage. And if you understand that, you'll understand that there will always be pullbacks due to liquidity hunting and liquidity providers, right? So liquidity hunting and the market makers who provide liquidity to the financial institutions. The market cannot just keep trading unfairly. It doesn't happen like that, right? So there will be opportunities to buy And so again, that coincides really with understanding, the fact that you don't necessarily want to try to pick the bottom on lower time frames. Look for higher time frames. Maybe shift your focus to the higher time frames. Look for the amount of demand that came in over a certain period of time, and also look for the reasons why. If there's no change in risk sentiment, or it doesn't look like if things are escalating, and you do see, for example, a bullish candle. Let's say, for example, you see prices have come down to an area and you see a really nice pin bar, right? Pin bar at a level of demand, and you want to be a buyer at a CAD against, for example, the Swiss franc. Yeah. Now you're in an area of demand. Now let's just say that candlestick there has formed at the end of the day, but in the news wires, things are getting worse and worse and worse and worse, right? Tensions are escalating, death toll is going up, there's chemical warfare, who knows? Just think of the worst things that could happen, in war. Is that an area, is that really, would that likely be profit taking from a move down, or is that likely to be a reversal? I mean, again, nobody knows, but the likelihood is that we could see more, potential downside, right? Whereas if that candlestick happens and we see over the period of a day, this is maybe a daily candle, or a 12-hour candle, and we've seen some positive news over the news wires, that could then obviously more likely lead to a potential reversal, right, or a pause. So there are things that we can do. And if you look at, what happened in, I guess, the worst crisis and the worst risk of sentiment in modern times, right? COVID-19, go back to, a chart 2020, between February and probably April, you'll see a massive move to the downside as, the risk, safe haven currencies, the yen was strengthening against, for example, the dollar, right? You saw something like this happen over a certain period of time. But then what happened is prices went to the upside, because the market then shifted its focus on a global recovery, right? So global recovery meaning who is handling the COVID crisis and lockdowns better than other currencies, right? And that was where money was going to flow. Risk off sentiment doesn't last forever. It shouldn't last forever. And even over a prolonged risk sentiment environment where we had the China-Trump trade war back in I think it was between 2018, 2019 now, 2019, we had even though, prices for certain currencies, risk off currencies, were strengthening, we still had pullbacks, in those, and large pullbacks in that sentiment, and in that risk off environment. Prices didn't go down forever, didn't keep going down, right? It doesn't happen, and if it does happen, it won't happen for long. And if you understand the market mechanics and the way that the market has to work as an auction, liquidity providers, liquidity hunting, there are still opportunities in a risk off environment to go long, just as there are risk in a risk on environment. There are always pullbacks, right? When we see the market in a risk on environment, when everything is all good in the world and we see prices going higher, there's always going to be pullbacks, right? There's always going to be pullbacks in a risk on environment. So what makes you think that there's not going to be pullbacks in a risk off environment? It makes absolutely no sense. And while you're in that trade, let's say, for example, you pick that trade, you might make a little bit, you might not, right? You might make a lot, who knows? But at some point during this downtrend, you could be in that trade, and then while you're in that trade, all of a sudden, again, a resolution is found between Russia and Ukraine, and then that trade then becomes a massive runner, right? That can be a 10, 20, 30, 40 to 1 type trade, So it's not necessarily what happens in the short term. It's really, how you handle things in the long term, and understanding fundamentals and value. So with that being said, I hope you found this useful, and take care, guys, and speak to you all soon.